Hi. JP Morgan's Jamie Dimon Fed to hike rates higher than the market expect. The head of the largest US bank said markets are underestimating the speed by which he expects the Federal Reserve to raise interest rates. In a letter to shareholders released Monday, JP Morgan Chase CEO Jamie Dimon added that short-term borrowing costs need to be substantially higher to address the rapid pace of price increases. The stronger the recovery, the higher the rates that follow. I believe that this could be significantly higher than the markets expect, Dimon penned in the annual letter. Dimon's remarks suggest that the Fed could lift interest rates more than 2.5% this year, as some betting markets are pricing in. High inflation and a strong labor market recovery pushed Fed Chairman Jerome Powell and his colleagues to pull back on the central bank's extraordinary pandemic-era monetary stimulus. Beginning with the first post-COVID interest rate hike last month, the Fed is now in the early inning of an interest rate hike cycle that will likely include further interest rate hikes throughout the rest of 2022 and likely beyond. JP Morgan's CEO Jamie Dimon listens as he is introduced at the Boston College of Executives Club luncheon in Boston, Massachusetts, US, November 23, 2021. JP Morgan CEO Jamie Dimon listened as he introduced at the Boston College. Several Fed officials are hinting that a double dump in interest rate hiking could be coming in future meetings. San Francisco Fed President Mary Daly, for example, told the Financial Times on Friday that she sees the case growing for a 0.5% interest rate increase in May. The Fed had not raised interest rates in increment larger than 0.25% since 2000. Dimon said the Fed should be open to more aggressive moves if the data continues to show unparalleled inflation. One thing the Fed should do, and seems to have done, is to exempt themselves, give themselves ultimate flexibility from the pattern of raising rates by only 25 basis points and doing so on a regular schedule, Dimon said. The Fed update summary of economic projections shows Fed policymakers' expectation for where interest rates could be in the next few years. Source: Federal Reserve. The Fed's update summary of economic projections showed Fed policymakers' expectation of where interest rates could be in the next few years. The Fed itself is projecting 7 total rate hikes through the end of the year to a target rate between 1.75% and 2%. Fed funds further markets are pricing in odds of a more aggressive Fed to a target rate between 2.5 and 2.75. The nation's top bank stands to benefit from higher interest rates, although JP Morgan Chase and the other large banks have managed strong profits despite rock-bottom interest rates. Higher rates will allow banks to expand margins on their lending products. In general, when the Fed was telegraphing further rate hikes than they are now, Dimon was similarly telegraphing that he could see the central bank moving faster than expected. What is proof of stake versus proof of work? The integrity of transaction in the crypto industry relies on two validation mechanisms. What makes them different and why do we choose one or the other? As Ethereum blockchain works, although the final stage of its upgrade, people will hear the term proof of stake more often. Creating An alternative, the term is often used in comparison with proof of work, and some crypto nominees may wonder that they mean. Ethereum 2.0 is upgraded to the Ethereum blockchain intended to increase Ethereum's capacity for transaction, reduce fees, and make the network more sustainable. Proof of work, the older of the two, uses a competitive validation method to confirm transaction and add new blocks to the blockchain. It requires a great deal of energy, which has raised environmental concerns. Proof of stake, which was created as an alternative to proof of work, is a cryptocurrency consensus mechanism for processing transactions and creating new blocks in a blockchain. A blockchain validator is responsible for verifying transactions on a blockchain. Once transactions are verified, they are added to the distributed ledger. In proof of work systems, validators are known as miners who solve computational math problems to win the right to verify transaction, then earn Bitcoin rewards for the work. Scroll to continue. The street recommends in proof of stake validators are given rewards as long as they stake the network token, Ethereum, and correctly participate in the network. Proof of stake is also considered to be less risky as far as the potential for an attack on the network, since it only allows the validators to choose a block of the provided a security deposit. The impending future. Alex Lambert, CEO of Nimbus platform, said proof of stake is the impending future for participation, and the risk-rewards debate certainly outweigh the absurd draw on resources. He discusses slashing a penalty for bad behavior and dishonest validation. Fundamentally, proof of stake will, in my opinion, make attack considerably more punitive and provide for easier identification of the attackers, he said. The automated methods of slashing, which segregates and burns the tokens of attackers, will certainly make attackers think twice before initiating. In addition, Lambert said the overall cost associated with attacking the network will be considerably higher than within proof of work. If we had to take a guess at this point, a legitimate attack on Ethereum would require roughly $20 billion in Ethereum to really make viable, with the risk of losing it all due to slashing, he said. Lambert added that whether it is proof of stake or what may eventually be an alternative method of participation, the only thing that is an absolute is that we get off of the antiquated system of proof of work. Okay guys, thank you for watching this video. Please wait for the another videos. Also subscribe for my channel. Bye.